Based on the historical data and forecast, Bitcoin shows a mixed trend with periods of volatility. The RSI indicates that the asset is generally not oversold or overbought, fluctuating around the midpoint. However, the Bollinger Bands suggest periods of potential price expansion. Considering the support price of $82,500 and resistance price of $85,200, I recommend a strategy that combines RSI and Bollinger Bands. The strategy will involve buying when the price touches the lower Bollinger Band and RSI is below 40, and selling when the price touches the upper Bollinger Band and RSI is above 60. Specifically, on April 17, 2025, the close price was $84,000, the RSI was 51.0, and the Bollinger Bands were 82500 and $87,300. The center of the Bollinger Bands was $82,500. I would enter a long position at $82,500, placing a stop-loss order at $81,800 and a target price at $85,500. On April 18, 2025, the forecast price is $84,400, the RSI is expected to be around 52, and the Bollinger Bands are $84,100 and $85,800. If the price reaches the upper Bollinger Band, I would enter a short position at $84,100, with a stop-loss at $86,000 and a target price at $83,000. This strategy aims to capitalize on price fluctuations within the established range, managing risk with clear stop-loss levels. Based on the historical data and forecast, Ethereum has shown significant volatility. The RSI readings have been consistently below 30 for a considerable period, indicating an oversold condition. The forecast for the next week suggests a downward trend, with prices potentially reaching $1,490. Considering the support level at $1,570 and the current oversold RSI, I recommend a long position with a conservative approach. We will enter a long position at $1,510, placing a stop-loss order at $1,490 to mitigate potential losses if the price continues to decline. The target price for this trade will be $1,550, aiming to capitalize on a potential bounce from the support level. To enhance the strategy, we will incorporate the Bollinger Bands. The price is currently near the lower band, further reinforcing the oversold signal. If the price breaks below the lower band of $1,490, it signals a stronger bearish trend, and we will exit the position. Conversely, a breakout above the upper band of $1,510 could indicate a potential reversal, and we may consider adjusting our target price upwards. This combined strategy leverages both RSI and Bollinger Bands to identify high-probability trading opportunities, balancing risk and reward for a potentially high return. Based on the historical data and forecast, XRP has been fluctuating within a range bounded by a support price of $2.02 and a resistance price of $2.54. The RSI indicates periods of oversold and overbought conditions, with recent values hovering around the mid-40s. The Bollinger Bands have been narrowing, suggesting a period of consolidation. Considering these factors, I propose a combined strategy leveraging RSI and Bollinger Bands. Initially, a long position can be entered at $2.03, coinciding with a potential bounce from the support level and the lower Bollinger Band. A stop-loss order should be placed at $1.98 to mitigate potential losses if the price breaks below the support. The initial target price would be $2.3, aligning with the upper Bollinger Band and a reasonable profit margin. To refine the strategy, we can implement dynamic adjustments based on the RSI and Bollinger Bands. If the price reaches the initial target of $2.3 and the RSI exceeds 70, indicating overbought conditions, consider taking partial profits and tightening the stop-loss to $2.2. Conversely, if the price declines and the RSI falls below 30, indicating oversold conditions, consider adding to the position at $2.01 with a stop-loss at $1.98. The ultimate target price will be $2.54, the resistance level. This adaptive approach, combining technical indicators and support/resistance levels, aims to maximize returns while managing risk effectively. Based on the historical data and forecast, BNB has shown a slight upward trend, consolidating around the $580 to $590 range with resistance at $611. The RSI consistently hovers below 50, indicating a generally oversold condition, particularly between April 4th and April 17, 2025. The Bollinger Bands show the price fluctuating within a relatively wide range, with the lower band frequently tested. Considering these factors, I recommend a long position strategy focusing on capitalizing on potential bounces from the support level of $590. My strategy involves entering a long position at $590, placing a stop-loss order at $586 to mitigate potential losses if the price breaks below the support. The initial target price is set at $597, aligning with the forecast price for April 24, 2025, and slightly below the resistance level. If the price reaches $597, we can consider moving the stop-loss to break even and maintaining the position for a potential further upward movement towards the $611 resistance. This strategy combines RSI's oversold signals with Bollinger Bands price fluctuations and support/resistance levels for a balanced approach. Based on the historical data and forecast, Solana demonstrates a clear upward trend, supported by recent price movements and the projected increase over the next week. The RSI consistently fluctuates, dipping below 40 on several days, indicating oversold conditions, while remaining mostly above 30. The Bollinger Bands show periods of contraction and expansion, suggesting volatility. Therefore, my recommended strategy is a combination of RSI and Bollinger Bands, with a focus on capitalizing on potential upward momentum. I suggest entering a long position at $129, coinciding with the beginning of the forecast period and a slight dip in the RSI. The stop-loss should be set at $126, just below the support level, to mitigate potential losses if the trend reverses. The initial target price is $135, aligning with the forecast price for the week, but we can adjust it based on the RSI and Bollinger Bands. To refine this strategy, we'll implement a dynamic target price based on RSI and Bollinger Bands. If the RSI reaches 70 or above, indicating overbought conditions, we'll consider taking partial profits at $135. Simultaneously, if the price touches the upper Bollinger Band, we will consider taking partial profits at $135. If the RSI remains below 70 and the price stays within the Bollinger Bands, we can extend the target price to $138. This adaptive approach allows us to maximize profits while managing risk effectively. The overall portfolio will be 60% RSI, 30% Bollinger Bands, and 10% support and resistance. This will allow us to take advantage of the most efficient strategy. Based on the historical data and forecast, TRON shows an overall upward trend with consistent support at $0.246 and resistance around $0.255. The RSI consistently fluctuates but remains mostly above 50, suggesting a bullish momentum. The Bollinger Bands indicate that the price has been trending within a relatively narrow range, but the upper band has been consistently testing higher levels. Given the forecast of $0.249 to $0.25 for the next week, I recommend a long position. The entry price should be $0.249, with a stop-loss set at $0.246 to mitigate potential downside risks. The initial target price is $0.255, aligning with the resistance level. To optimize returns, I suggest a tiered target strategy. First, aim for $0.255 for a quick profit. If the price breaks through this level, move the stop-loss to the previous resistance level, $0.252, and set a second target at $0.25. This approach allows us to capture profits while minimizing losses. The RSI readings are not extreme, so we don't need to adjust the strategy based on overbought or oversold conditions. This strategy combines technical indicators and price action to maximize profit potential while managing risk effectively. Based on the historical data and forecast, Dogecoin shows a sideways trend with price fluctuations between the support of $0.142 and the resistance of $0.163. The RSI indicator fluctuates between 32.8 and 48.8, indicating periods of oversold and overbought conditions. The Bollinger Bands show that the price is currently near the lower band, suggesting a potential bounce. Therefore, I recommend a moderately bullish strategy focusing on short-term gains. We will enter a long position at $0.15, placing a stop loss at $0.144 to limit potential losses. The initial target price will be $0.16, aiming to capitalize on a potential bounce from the lower Bollinger Band and a move towards the resistance level. To enhance the strategy, we will incorporate RSI signals. If the RSI falls below 30, indicating an oversold condition, we will enter a long position at $0.152 with a stop loss at $0.146 and a target price of $0.16. Conversely, if the RSI exceeds 70, indicating an overbought condition, we will consider a short position. However, given the sideways trend and the current proximity to the support level, a long position is favored. The final portfolio will be 70% long position at $0.15 with a stop loss at $0.144 and a target price of $0.16, and 30% long position at $0.152 with a stop loss at $0.146 and a target price of $0.16. Based on the historical data and forecast, Cardano shows a downtrend with recent price fluctuations. The RSI consistently remains below 80, indicating the asset is not overbought. However, it has dipped below 30 on several occasions, suggesting potential oversold conditions. The Bollinger Bands show the price oscillating within a narrowing range, indicating decreasing volatility. The forecast for the next week projects a continued downtrend, with prices potentially reaching $0.572. Considering these factors, I propose a contrarian strategy focusing on short-term bounces. My recommended strategy is to initiate a long position when the RSI dips below 30, signaling an oversold condition. For example, if the RSI falls to $28.5, enter a long position at $0.611. Set a stop-loss order slightly below the support level at $0.607 to limit potential losses. Aim for a target price near the recent resistance level, around $0.631, for a potential profit of $0.02. If the price breaks below the support level, indicating a stronger downtrend, exit the position immediately. This strategy combines RSI signals with support and resistance levels to capitalize on short-term price reversals while managing risk effectively. Based on the historical data and forecast, Chainlink shows a fluctuating trend with support at $12.2 and resistance at $12.8. The RSI values have been oscillating between 30 and 49, indicating periods of both oversold and overbought conditions. The Bollinger Bands have been widening and narrowing, suggesting increasing and decreasing volatility, respectively. Considering the current RSI around 45.9, which is approaching the overbought level, and the forecast price remaining around $12.2 to $12.4, I recommend a cautious strategy focused on short-term gains. My strategy is to implement a short position when the price touches the upper Bollinger Band. Specifically, enter a short position at $12.4. Set a stop-loss slightly above the upper Bollinger Band at $12.7 to limit potential losses if the price unexpectedly rises. The target price for this short position is the support level of $12.2, aiming to capitalize on a potential retracement towards support. This strategy combines the RSI and Bollinger Band signals to maximize profit and minimize risk. This is a high-risk, high-reward strategy, and should be executed with caution. Based on the historical data and forecast, Avalanche shows a fluctuating trend with consistent support at $18.7. The RSI values have generally been between 34.5 and 55.7, indicating periods of both oversold and overbought conditions. The Bollinger Bands have widened and narrowed, suggesting periods of increased and decreased volatility. Considering this, I propose a combined strategy utilizing RSI and Bollinger Bands for optimal returns. We will initiate a long position when the RSI dips below 35, indicating an oversold condition, and the price is near the lower Bollinger Band. Specifically, on April 18, 2025, with a forecast price of $18.8, the RSI is predicted to be below 35 and the price is near the lower Bollinger Band of $18.4. We will enter a long position at $18.4, setting a stop loss at $18.1 to limit potential losses. The target price will be $19.5, aiming to capitalize on the anticipated upward movement. This strategy combines RSI's indication of undervaluation with Bollinger Band's confirmation of potential price reversal, maximizing the probability of a successful trade. Based on the historical data and forecast, Aave shows a volatile trend with periods of both upward and downward movement. The support price consistently remains at $134, while the resistance fluctuates around $148. The RSI values mostly hover below 50, indicating that the asset is generally in an oversold condition. The Bollinger Bands show periods of contraction and expansion, suggesting potential breakout opportunities. Given this analysis, I recommend a strategy combining RSI and Bollinger Bands to capitalize on short-term price movements. My investment strategy involves a combined approach utilizing RSI and Bollinger Bands with a focus on short-term gains. I suggest entering a long position at $132 on April 18, 2025, when the forecast price opens. The stop loss should be set at $130 to limit potential losses if the price declines. The initial target price is $138, aligning with the recent resistance levels. If the price reaches $138, I suggest setting a trailing stop loss at $135 to secure profits and potentially capture further upward movement. This strategy leverages the oversold condition indicated by the RSI and the potential for a breakout as suggested by the Bollinger Bands. The combined approach allows for a balanced strategy, mitigating risk while maximizing potential returns. Based on the historical data and forecast, Bitcoin Cash shows a generally upward trend with periods of volatility. The RSI consistently remains below 50, indicating a prevailing downtrend. However, the recent data shows a bounce from the lower Bollinger Band, suggesting a potential short-term upward movement. I propose a combined strategy utilizing RSI and Bollinger Bands to maximize returns. We will initiate a long position at $317. The stop loss will be set at $314 to protect against a potential downturn. The initial target price will be $325, coinciding with the support level. To capitalize on the predicted upward momentum, we will implement a trailing stop loss strategy. Once the price reaches $325, we will adjust the stop loss to $321. If the price continues to rise, we will further increase the stop loss to maintain profitability. The final target price will be $344, the resistance level. This strategy combines the RSI's indication of potential oversold conditions with the Bollinger Band's confirmation of a potential upward breakout, aiming for high returns while mitigating risk. Based on the historical data and forecast, reserve rights has been fluctuating within a range, with support around $0.00681 and resistance around $0.0078. The RSI indicates that the asset is neither significantly overbought nor oversold, generally hovering between 48 and 58. The Bollinger Bands show that the price has been oscillating around the middle band, suggesting continued sideways movement. Considering these factors, I propose a short-term swing trading strategy focusing on capitalizing on the range-bound behavior. My strategy involves entering long positions when the price touches the support level of $0.00681, with an initial stop loss placed at $0.0065, just below the lower Bollinger Band. The target price for this trade would be the resistance level of $0.0078. Conversely, I would consider short positions when the price approaches the resistance level of $0.0078, setting a stop loss at $0.0080 above the upper Bollinger Band, with a target price of $0.0073 near the support level. This combined strategy allows us to profit from both upward and downward movements within the established range, maximizing potential returns while managing risk with clearly defined entry, stop loss, and target prices. Based on the historical data and forecast, Near Protocol has been exhibiting a downtrend with increased volatility. The RSI consistently remains below 50, indicating a prevailing bearish sentiment, with values dipping below 30, signaling oversold conditions on several occasions. The forecast for the next week projects a continuation of this downward trend, with prices potentially reaching $1.84. Considering the support price of $1.97 and the forecast, I recommend a short selling strategy. Enter a short position at $2, setting a stop loss at $2.14 to protect against unexpected upward movements. A reasonable target price would be $1.84, aiming to capitalize on the predicted downtrend. To refine the strategy, incorporate the Bollinger Bands. When the price touches the lower band, it suggests an oversold condition, potentially offering a favorable entry point for a short position. If the price breaks below the lower band, it reinforces the bearish outlook. However, given the forecast, I prioritize the short selling strategy. Therefore, the final portfolio will be a short selling strategy with an entry price of $2, a stop loss of $2.14, and a target price of $1.84. This approach aims to maximize potential returns while managing risk effectively in the current market conditions. Based on the historical data and forecast, EOS has been exhibiting significant volatility, fluctuating between a support price of $0.59 and a resistance price of $0.636. The RSI has been oscillating around the 50 mark, indicating neither strong overbought nor oversold conditions. The Bollinger Bands have been widening, suggesting increased market uncertainty. Considering this, I propose a strategy that combines RSI and Bollinger Band signals. Specifically, on April 24, 2025, if the price opens below the lower Bollinger Band of $0.633 and the RSI is below 20, enter a long position at $0.633. Set a stop loss at $0.59, just below the support level. A target price of $0.844, near the upper Bollinger Band, would be set to capture potential upside. To refine this strategy, I will incorporate a trailing stop loss mechanism. If the price rises to $0.7, adjust the stop loss to $0.65. If it reaches $0.75, move the stop loss to $0.7. This protects profits while allowing for continued gains. If the price fails to reach the target price of $0.844 and instead falls back towards the support level, the trailing stop loss will automatically exit the position, minimizing losses. This approach balances risk and reward, capitalizing on potential upward movements while safeguarding against adverse price action. Based on the historical data and forecast, Pudgy penguins demonstrates significant volatility. The RSI consistently dips below 30, indicating oversold conditions, while occasionally approaching 50, suggesting a potential shift in momentum. The Bollinger Bands show periods of contraction and expansion, reflecting changes in volatility. The forecast predicts a slight downward trend initially, then stabilizing around 0.00417. Considering these factors, I recommend a combined strategy leveraging RSI and Bollinger Bands. My strategy involves a long position when the RSI falls below 20 and the price touches the lower Bollinger Band. Specifically, enter a long position at 0.00372, place a stop loss at 0.00352, and set a target price at 0.00472. This strategy capitalizes on potential rebounds from oversold conditions, while the stop loss protects against further declines. If the price fails to reach the target and shows signs of weakness, a second entry can be considered at 0.00417 with a stop loss at $0.004 and a target price at 0.00545. The combination of these two strategies will maximize the potential for high returns. Based on the historical data and forecast, Bittensor shows a volatile trend with periods of consolidation and upward movement. The RSI consistently fluctuates around the 40 to 50 range, indicating neither strong overbought nor oversold conditions. However, the recent dip and subsequent recovery suggest a potential upward trend. Considering the support at $230 and resistance at $253, combined with the Bollinger Bands showing price movements within a relatively narrow range, I propose a strategy focused on short-term gains. We will enter a long position when the RSI falls below 35 and the price touches the bottom of the Bollinger Bands, which occurred on April 11, 2025, with a price of $195. The entry price will be $195 plus $1, with a stop loss set at $190 to limit potential losses. The target price will be $230, aiming to capitalize on the support level and a potential bounce. To refine this strategy, we will incorporate the forecast data. The forecast indicates a gradual increase in price over the next week, which supports the upward trend. I suggest adjusting the target price to $236, aligning with the forecast for April 18, 2025. If the price reaches $236 plus $1, we will take partial profits and move the stop loss to break even. This approach allows us to secure gains while staying in the trade to potentially capture further upside. The overall portfolio will prioritize this short-term trading strategy due to its potential for quick profits and manageable risk, given the defined entry, stop loss, and target prices. Based on the historical data and forecast, Artificial Superintelligence Alliance shows a fluctuating trend with periods of consolidation and upward momentum. The RSI consistently hovers around the oversold level of 30, indicating potential buying opportunities. The Bollinger Bands suggest periods of volatility, with the price frequently touching the lower band. Given the current RSI below 30 and the forecast predicting a price around $0.45, I recommend a long position entry at $0.437. To manage risk, set a stop loss at $0.429, just below the support level. For the target price, I anticipate a move towards the resistance level of $0.505, so aim for a target price of $0.505. To refine this strategy, I will incorporate the Bollinger Bands. If the price breaks above the upper band, it signals a strong bullish trend, and I will adjust the target price accordingly. Conversely, if the price falls below the lower band and the RSI confirms an oversold condition, I will tighten the stop loss to $0.41. This combined RSI and Bollinger Bands approach allows for dynamic adjustments based on market conditions, maximizing potential returns while minimizing risk. This portfolio is the most efficient of the three strategies. Based on the historical data and forecast, Render shows a generally upward trend, though with some volatility. The RSI fluctuates between oversold and overbought levels, suggesting potential short-term trading opportunities. The Bollinger Bands indicate periods of contraction and expansion, which can signal potential breakouts. Considering these factors, I propose a combined strategy leveraging RSI and Bollinger Bands for optimal returns. We will initiate a long position when the RSI dips below 40, indicating an oversold condition. Specifically, enter a long position at $3.74. Place a stop-loss order at $3.73, just below the support level, to limit potential losses. Set a target price at $4.06, aligning with the recent high. To refine this strategy, we'll incorporate the Bollinger Bands. If the price touches the lower band, it strengthens the oversold signal, confirming our entry point. If the price breaks above the upper band, it signals a potential overbought condition, prompting us to take profits early. Therefore, we will adjust the target price to $3.9, based on the forecast data and the upper Bollinger Band. This combined RSI and Bollinger Band strategy aims to capitalize on short-term price movements while managing risk effectively, targeting a high return with clearly defined entry, stop loss, and target prices. Based on the historical data and forecast, PYTH network shows a fluctuating trend with periods of consolidation and minor upward movement. The RSI consistently remains below the oversold level of 20, indicating a lack of strong selling pressure. The Bollinger Bands suggest that the price is currently near the lower band, which could signal a potential bounce. Considering these factors, I recommend a long position with an entry price of $0.127. Place a stop-loss order at $0.115, just below the established support level, to limit potential losses. A reasonable target price would be $0.138, aligning with the recent resistance level. To refine this strategy, I will incorporate the RSI and Bollinger Bands indicators. When the RSI falls below 30, it suggests an oversold condition, which could be a good entry point. Conversely, when the RSI reaches 70 or higher, it indicates an overbought condition, suggesting a potential shorting opportunity. The Bollinger Bands can help identify potential price reversals. When the price touches the lower band, it could indicate an impending bounce, and when it touches the upper band, it could signal a potential pullback. Combining these indicators, I suggest a portfolio with a 60% weighting on the long position at $0.127 with a stop loss at $0.115 and a target price of $0.138, and a 40% weighting on a short position when the RSI exceeds 70, with an entry price of $0.138, a stop loss at $0.144, and a target price of $0.125.